Hello guys, welcome back to a new video. In this one, I wanted to share with you something that is very important, and it is one of the main reasons why you are getting stopped out, which is the fake market structure shift or the fake flip. So I know that most of you out there wait for the structure to shift. So you are waiting for that protected swing to get broken, right? And then you will look for a retracement and then taking a short entry from here. But a lot of times what price does is that it will stop you out right here, and you are wondering why this is happening. And pretty much all the traders out there will refer to this as a fake market structure shift, but in fact this is not a fake market structure shift. This is a real market structure shift, and I will explain to you why this is a real one and how to know if this market structure shift is going to take price to here, is going to send price to lower levels, or it will only take us to here and then trade higher. So this is the subject of this video, and now without any further introductions, let's get started. And before I start, consider following me on my Twitter account. I share here daily charts, trade breakdowns, right? And maybe you can find a value in it. And of course, you can ask me anything, so my DM is always open for you. So let's start with a simple drawing right here. So let's say we have a bullish trend, and let's consider this the 1 minute time frame, right? So this is the 1 minute time frame. Keep this in mind. We are trading higher, you are creating higher highs and higher lows, right? You will see this happens all the time. Now, as we all know that this 1 minute trend will shift in most cases, 90% of the time, the 1 minute bullish trend will shift from bullish to bearish, right? When we hit a higher time frame zone. So this could be a 15 minute or a 30 minute or a 1 hour zone, right? It will hit this and then it will shift structure. So also keep this in mind. So this is a higher time frame area, and let's consider this a 15 minute zone. This is a 1 minute trend, and this is a 15 minute point of interest. So here, what happens is that we trade to here, right? And now this is a market structure shift, right? Why is this a market structure shift? Is that we closed below this protected low. This is valid. This is a protected low because it created a new high above this one right here, right? And now what you want to do, and most of traders will take their entry from here, right? So once price retraces to this zone right here, maybe to the 50%, right, of this zone, they will take their entry and they will target maybe this one, maybe even 1 hour from here. So if they take it from the 50%, right, 1 hour, or maybe they want higher RR, it doesn't matter, right? And the stop loss is here. So what happens next is that price will run through their stops and then continue higher. Now, why do you think this happens right here? Most traders will refer to this as a fake market structure shift, right? Now, this can happen also even price hits that higher time frame zone, right? So even if price hits that higher time frame zone, you can still face this setup right here. This setup can still fail. As I said, a lot of traders will refer to this as a fake market structure shift. Now, why do you think that this happened right here? Some of you will say that we didn't reach the higher time frame zone, and that's right. That's one of the reasons, is that we didn't reach the higher time frame zone in order for this market structure shift to send price lower. But also, if you take a closer look, and the second reason is that this market structure shift, the objective or the goal of this shift is to mitigate an area that has been left unmitigated, as you can see here. So this bullish area has not been mitigated yet. Price left it here. It created a low and then a new high. So it created a new zone right here. Now price will not come back every time to mitigate this zone. Sometimes it will come back to this zone right here and then continue higher. But of course you need a lower time frame confirmation in here, inside this one. But if you don't have a lower time frame confirmation and price kept going lower and lower, you think that this is the market shift that will send price lower and you take your entry from here. But what you don't realize or you didn't notice is that this move right here already did its job, which is mitigating this zone. So the moment you want to take the entry from here, the move has already done. So there is no reason for price to reject from here and continue lower. The objective has already been met to mitigate this zone, continue higher into this higher time frame zone, right? This 15-minute zone, and then continue lower. Now there is an exception to this, which is if price traded to here, right? It closed below this low right here, right? And now you can enter this trade. And why is that? Because the objective has not been met yet, right? So this is still an unmitigated zone, but you need to pay attention that your TP must be here, right? Not here. The TP must be this unmitigated zone, and then you can look for longs from here. So once price taps into this unmitigated zone, you can still look for longs because the objective, the higher time frame zone, is still intact, right? And here now you can look for this pattern right here to take price lower, right? Now in this video I want to show chart examples, maybe on the next video, but of course you can backtest this by yourself. Go to your charts and you will notice this happens all the time. Now I told you before that price can go all the way to here, taps into that higher time frame zone, and it will still give you that fake market shift, right? And it will fill just like this. Now why is that? Although we tapped into that higher time frame zone. So one of the reasons is that this zone, so maybe this zone is a little bit wide like this. This zone has still a lot of zones inside it. So maybe this is a 15-minute zone and the zones inside it like this. Let's draw this. Right, so this is the zone, the 15-minute zone, and inside that zone there is unmitigated zones in here, and price taps to here, and we still have unmitigated zones right here. Maybe we have fair value gaps, imbalances, right? So this is only to mitigate this zone right here, and then push price deeper into the zone, mitigate all of these, and then it will give you that the market shift that will actually send price to the downside. So here you have two choices. You can either take an entry from here if the objective is not met yet, right? If the market gave you a retracement from here, and you can take your entry and your TP is here, or you can let this pass, wait for price to tap into this unmitigated zone, look for a confirmation in here and take price to the upside. Or the third choice, right, is to wait or to let this all pass, and you can take your trade from the higher time frame zone if a lot of zones right here has been mitigated, right? So the next time you want to take a trade, I want you to zoom out, look around you. What is the context of this market structure shift? Don't focus on the pattern itself. Focus on the structure around it. What is happening? What is the narrative behind it? Are we ready to take price to lower prices? Or this is just a structure shift to mitigate the zone and then continue higher, right? So this is the end of this video. It was a short one. If you have any questions, please DM me in my Twitter account or leave a comment down below, and I'll answer you as soon as I can. And now happy trading and good luck.